What is going on, guys? Nick here, back with another video. Oh boy, what happened to Nvidia? They just released their earnings today and the results were not exactly pretty. Revenue came in at $6.7 billion versus $8.1 billion expected, which is a massive miss, and their earnings came in at 51 cents per share versus $1.26 expected. Out of these two numbers, the most concerning to me is the revenue. Most of the time we focus on earnings and profit for a good reason, but sometimes expenses creep up or weird things happen and companies end up spending a little more than they expected and you end up with earnings misses. But when you have a company that was projected to earn $8 billion in revenue, missed that by over $1 billion, that's a pretty big deal. That means that the decline in their sales was much larger than what was expected. Now, when you start to look into the details, it's not that big of a surprise why they missed. Nvidia's gaming department, the one that contains all of their GPUs, which a lot of them have been purchased for crypto mining, dropped by 33%, which was a much sharper decline than anybody had expected. But the fact that they had a drop off, that really should not come as a surprise. Between 2020 and 2021, the crypto surge fueled sales for Nvidia, with the reason being that their GPUs are very good at mining Ethereum. All these people who wanted to go out and get rich in the crypto market without going out and buying all of these coins just decided, why don't I start mining them for myself? So they started buying up all of these GPUs, and if you have looked at any discussion about the market for purchasing GPUs and semiconductors, you can see evidence of this everywhere. The prices have gone through the roof on a lot of these products. But with the crypto bubble bursting, for now at least, we'll see what the future holds, it's not that surprising that people seem to have lost interest and we've seen a big demand slump in the GPU market, especially the ones that are typically used for the crypto mining. Now, it's not that surprising that their revenue fell, but what is surprising is just how fast this happened. This is now, I believe, my third video on Nvidia, and the issue that I noticed from a pure valuation standpoint is Nvidia, while it's gone through these boom and bust cycles with crypto going up and going down, it was priced as if the current boom was just going to continue going forward. And in November, when I made my video explaining why I was selling my Nvidia stock, this was the reason that I gave. Analysts were only projecting about 14% growth going forward, which is roughly where they're projecting today, and the stock was trading around 80 times earnings. While it seemed like a lot of the analysts had recognized this, it doesn't seem like a lot of the retail investors who were buying Nvidia stock at the time understood this themselves. But I think what's even more concerning with this sharp decline is if Nvidia is going to see these consistent boom and bust cycles every time crypto goes up by a whole lot and then comes down by a whole lot, we might have to start looking at this business as a more cyclical business. The same way we priced Micron and the same way we've treated Apple in the past. Now, Nvidia says that they're going to adjust their prices to address the challenging market conditions, which in other words means that they're going to start cutting prices if you can't read between the lines. And due to the demand surge that we've seen over the past 2 years, GPUs have been pretty expensive. But when the crypto boom has suddenly gone away, Nvidia is left scrambling trying to figure out how exactly to move forward. They themselves hardly have an understanding of how much exactly the crypto market is going to impact their business. Their CFO said that volatility in the cryptocurrency market, such as declines in cryptocurrency prices or changes in the method of verifying transactions, including proof of work or proof of stake, has in the past impacted and can impact in the future demand for their products and their ability to accurately estimate it. The CFO went on to say that they're unable to accurately quantify the extent to which cryptocurrency mining contributed to the decline in gaming demand. Now, what he's saying here is he doesn't know exactly how much the crypto decline is going to impact their GPU sales. Nvidia is basically just along for the ride with the crypto booms and busts, and it's anybody's guess as to how much of an impact they're going to have. And this is problematic for their type of business. See, semiconductors aren't like selling t-shirts where you can just buy more t-shirts, buy more ink, and start mailing them out. Semiconductor research and investment in infrastructure takes time and billions of dollars. It's not easy to scale up an excellent product to meet the consumer's demands. And additionally, if you overestimate how much demand there might be, Nvidia could find themselves in a situation like Peloton has, where they built way too many bikes and now they have way too much inventory and they just don't know what to do with it. Excess inventory for a company like Nvidia, where their product value will decline over the next couple of years as the demand for processing power continues to increase, is a big problem. Unlike Peloton bikes, they can't just sit around in a warehouse and wait for sales. Computers continue to get faster, and they continue to use more processing power, and their competition is gonna catch up if they end up having to sit around. Now, aside from all this doom and gloom, there was actually just a little bit of good news along with this earnings release. Nvidia announced that their data center business rose by 61% to $3.3 billion in revenue. And the reason for this was the big cloud providers, companies like Microsoft and Amazon, are continuing to scale the massive corporate transition to the cloud service. If they can continue to grow their server business, which is going to be a lot less cyclical, this could smooth out some of the massive drops in revenue and profits that they're going to see in the computer market. So this chart shows the trailing 12 months from each quarter that Nvidia has reported their earnings. The part that you see in red is what they released in their last earnings report, and we can see how small that portion of that red line makes up over the past year. This basically means that the earnings that they contributed from this last quarter aren't very much in comparison to what they earned over the last year, and we can expect to see Nvidia's annual earnings decline pretty rapidly if this continues. When we look at the past 10 years worth of revenue and net income, we can see how revenue absolutely exploded between 2019 and 2022. They went from a peak of about $11.7 billion in revenue in 2019 to almost $27 billion in 2022. This is more than doubling their revenue in just a couple of years. And for a company at this scale, that's pretty rare to see. So, quick note before we get into these forecasted earnings, we haven't had enough time yet for the analysts to put out their updated numbers. And the guidance that Nvidia put out for next quarter came in at $5.7 billion in revenue. So I expect that these numbers are going to fall. So the valuation from this point forward is going to be a little bit optimistic, and it's not going to reflect the recently updated guidance. However, it does give us a pretty good picture of roughly what the company should be worth. As of yesterday, the forecasted earnings for Nvidia was for the revenue to go from about $27 billion over the last year and $9.7 billion in profit to $45 billion in revenue and $21 billion in profit by 2025. When we look at the year-over-year revenue growth on a chart, we can see that by 2025, the revenue growth is projected to slow down to only about 11%. So if we value them with a growth rate between 11 to 16%, that puts their fair PE value going forward between 21 and 34. And when we go over to the valuation chart, and now keep in mind that this is the analyst projections prior to Nvidia releasing their updated guidance. So these numbers will come down for Nvidia. But 2025 puts their value somewhere between 183 per share and 297, which gives them a low-end upside of about 6% and a top-end upside of about 72%. And again, this is going to come down. So right now, I just don't really see Nvidia as a great buy right now. And unless they outperform the current analyst expectations for the stock going forward, I just don't really see it as a great buy. I think there is actually a lot better value out there on the stock market. So what happened to Nvidia? Well, basically the crypto wave that they rode over the past couple of years has come to a halt. We're kind of waiting around to see what's going to happen to crypto. In the meantime, they're having to slash their prices to try to get rid of their GPUs that they have, and they're really just in a tough spot. Again, the server business is doing pretty well, and hopefully this can kind of take over for them going forward, but it's going to be a little while before we see that really kick in and smooth out some of these ups and downs that we're going to see in the computer market. So that's the video, and as always, thanks for watching.